Hello and welcome to an FXTimes morning video brief. I'm CMS Forex market analyst Nick Nassad. Today is Friday, November 20th, 2009, around 10:30 a.m. Eastern Time. Just wanted to give you a quick recap of the overnight action and why we had some continued greenback strength. We had a continuation of some of the themes we saw yesterday as investors and traders bought the greenback and sold the euro and other higher yielders, as there's revived concerns about how fast the global economy will rebound, and that sort of gave investors the opportunity to shun riskier assets. We had declines in stock markets, gold, and oil that began in Asian and European trading, and that continued into early New York trading. So here we're taking a look at the euro dollar with 30-minute candles, and we see that following our decline in the greenback yesterday and then a counter rally, we had another slide, this time touching the 1.48 area, which has been our support level going back to November, the beginning of November. We had ECB President Trichet say that even though it's too early to say that the crisis is over, but that banks should begin bracing themselves for a timely, though gradual, reduction of support from the ECB. So that means that the generous loans that they've been giving and refinancing that they've been giving to loans will now begin to be withdrawn, and so banks need to begin preparing for that. So that could affect the supply of credit and could influence growth in the Eurozone. Here we're taking a look at the Australian dollar Japanese yen pair, which saw the pair falling in favor of the yen, as we saw riskier bets being, which carry trade and the Australian dollar is a very big part of, were being taken off the table, especially as we come into next weekend, which is going to be a shortened weekend, and so traders are right now pairing their more riskier assets, more riskier trades like the carry trade. We also had the Bank of Japan, or the government of Japan, officially declare that the economy had fallen into deflation due to weak domestic demand. So that's sort of a negative tone and added to risk aversion. And then a final quick look, we see here the pound dollar pair, which fell very sharply in today's trading, sliding almost 200 pips from high to low. This is probably a continuation of yesterday's decline on the back of a very poor government borrowing number, where the UK government hit a new record October high for borrowing, and it just shows sort of the deterioration of that country's fiscal balance right now. There was also a report from Nationwide that growth in UK unemployment during 2010 is likely to put downward pressure on housing prices. So overall, we had a continuation of the themes in the second half of the week, which is concern about global growth, and so that has been favoring the greenback and hurting our euro, pound, Australian dollar, and other higher yielding currency pairs. So we'll be back later today with a full recap of the market, along with a more clear technical picture. And so that's it for this morning recap. I am your CMS Forex market analyst, and please visit FXTimes.com for more news and videos.